Looking at the APG strategy, we have a fully integrated strategy. That means that we do not clearly differentiate between listed versus non-listed real estate. Because in the long run, these things behave exactly the same. Nevertheless, we try to broaden our investment universe by selecting both, because sometimes a good company or the best exposure is available on the listed side, and in another case, the better strategy, which is more suitable for a specific sector, might be available on the non-listed side. So broadening that investment universe by taking this integral approach towards listed and non-listed real estate clearly benefits the performance of our clients.
We feel that investing through the listed real estate securities market is a very efficient way of gaining exposure to real estate. Basically because of three reasons. The first one being the governance we get. These funds, because they're stock market listed, they are followed by the central banks, by financial markets authorities, by stock exchanges, and also by fellow investors and sell-side analysts, which ensures that there's a proper guidance on governance, which is important to us and our clients. Secondly, there's liquidity, which helps us to move our positions back and forth. And because real estate is a local and a cyclical business, there's real opportunities there in that liquidity. And thirdly, it's a cost-efficient way of investing in real estate. We don't have very high costs in moving positions around, and the investment itself, because it's in large entities that hold a lot of real estate and essentially they're infinite life, it saves a lot of costs compared to direct real estate as well as compared to non-listed funds. So it's an efficient way of investing in real estate.
For us, when we think about listed real estate compared to private options, it's a clear trade-off of liquidity versus volatility. And those liquidity and volatility questions are always the ones we deal with. For us, the liquidity, if you get the right exposures, can outweigh the disbenefits of the volatility. But for us, those are the main issues. Of course, our recent experience has been coloured by the fact that some of the private funds don't deliver the returns and the liquidity that investors are looking for, which I think makes the case for listed real estate arguably more compelling going forward. And in terms of what is needed to encourage greater involvement from institutional investors, I think the process that EPRA have carried out over the last few years of education about the characteristics of real estate stocks are very important and essential. I think the education process is key to seeing more investors investing in listed real estate.